Hey, what's up, guys? rayBar checking in. It's been a while since I posted. As you've seen, the portfolio has jumped up sizably since the last post. I'm up to $54,900, and you're seeing it move right now on a Saturday because of my Bitcoin holding. A lot of this is through, selling my options, doing the wheel strategy, doing a little bit of spreads, but also a little bit of capital injection. As you notice, my buying power is around $7,200. I was doing that mainly to take advantage of the higher APY that Robinhood Cash provides. While I am a gold member, paying I think $50 annually, the average savings that I've seen right now is around 3.8%. So I'm getting that extra 20 basis points. I think it's worth it, but I didn't move all my money over here because I have a lasting relationship with Ally Savings. So I have the majority of my cash over there, but this whole purpose is to show you guys how to build a portfolio from scratch and kind of go from there. Anyways, going down into the portfolio, continuing to buy Bitcoin. I'm buying about I think $1 to $2 a day on the reoccurring buy. I'm not very crypto sophisticated, so I know a lot of people say buy it on your wallet and store it offline and all that kind of stuff. But honestly, it's just a kind of a speculative play to kind of get involved for me. You're seeing here my large position is clearly Palantir. We'll kind of circle back and talk about that one. But, mainly buying into the S&P 500 index here. This is going to be, the general safe long-term play where you have built-in diversity and kind of, portfolio change up, all that kind of stuff. And then I've been doing a lot more to kind of focus on dividend income plays. So obviously Main Street Capital, business development company with a fairly high yield. I think it's about 5%. Yep, so about 5% right now at the price it is now. But if you've noticed, my average cost around $43. I've been buying fairly heavily. Right now I got an expected dividend coming in for $18.69. And again, trying to build out that income because, I'm about to be 34 years of age, and where I'm kind of looking at it now is if I can continue to develop my income and I can eventually replace some bills. So if I can get a couple $100 in dividends, and I can replace my phone bill, my car insurance, all that kind of stuff. That's the ultimate goal here. So you're seeing Main Street Capital, Republic Services, Walmart, Microsoft, Google. These are kind of stocks that are going to be paying dividends. And, I'm building out my positions here. I believe in all of these, and I'll go kind of more in depth at a later time with each of them as to why I think they're going. But I think right now, honestly, in the Mag 7, Microsoft and Google is a pretty decent buy at these prices, 409 and 186. You're seeing that pullback post the DeepSeek kind of reveal that a lot of people think that the CapEx spending from the Mag 7 is going to be a little bit over what they should spend based off of how cheap DeepSeek was able to do it. And, there's a whole conspiracies there around, was it real? Were they actually able to do it with the lesser NVIDIA chips? But, that's all going to be speculation at the end of the day. But honestly, I think that that's a good thing for us long-term investors, that we like these pullbacks. And again, Microsoft and Google are amazing at this price. Microsoft is still going to continue to spend and build out their AI infrastructure and continue to, like I said, invest into the future. So I think, 409 is a pretty good price. And here I'm buying, like I said, $3 a day. I got several reoccurring buys going on. I think time in the market always beats timing the market. But honestly, at these prices, I've been buying, kind of chunks here and there on top of my regular buys. Let's go look at this real quick. Yeah, see $10, $1, $5, $1, $5, 20. And that's the thing, right, is over time, as you continuously buy, you're going to build out your portfolio and then kind of go, to the moon almost, right? Snapchat, I don't really believe in this company necessarily, but if you look over the last 3 months, they kind of hover between $12, $12.50, down to about $10. So this is a perfect play for the wheel strategy. I have a video on the wheel strategy that I need to update, but honestly, I'm just, buying and selling, or selling options, honestly. I'm selling cash secured puts and then covered calls on this stock in that range, like I said. The covered calls I'm selling around 12 to 12.50, and then the cash secured puts I'm selling around 12 to 11.50. And this is mainly just for income because the options premiums are pretty decent on this one. Like if you notice here, $81 I made for a short roll, making a small $4 here, $2. I got assigned, sold out at $12 a share. But before that, I made $66 on the premium, then $26. And so see, the premium was decent. So I mean, if you look here in the history, that's basically all I've been doing is like selling to get premium. And it's fairly new. I've been doing this since November. So I think I made, maybe you guys can go back and calculate it at this point, but probably over $200 on the position, and $200 on 1,200 and, was it 2.5, 3 months? It's not a bad play considering, that's going to be better than, making what you're going to make on a high yield savings account. So that play, again, I haven't done research necessarily into Snapchat, but because of like that range that I just showed you guys, let me go back to that. That's staying in this range. See, it's very range bound. You had kind of earnings here, but it's very much range bound in that time frame, right? You had that dip here after their earnings, and then, there's a little bit of volatility here right after. And then, like I said, it stays in that range. These range-bound stocks are going to be the best to run your wheel strategy on. And going back to my strategy about talking about passive income, I bought another BDC Gladstone investment. So this is, they're pretty range-bound as well. But I usually don't sell options on these income plays because the yields are fairly substantial in themselves. Yeah, 7% dividend yield. So, I'm doing this to kind of build my income, and that's going to be my main focus this year is to build out these dividend income plays to rebuild my dividend portfolio. I had a moment in my private portfolio where I had a pretty decent and sizable dividend income, but then, I kind of diversified a little bit, sold off on some of my long-standing dividend positions, and went really heavy into some growth plays like Palantir, SoFi, Aurora Innovative Technologies, and then, the general Microsoft, Google, AMD, all those. And so, talking about Palantir, I mean, look at this, guys. $15,600, 212% on my position here. I'm beating myself up because in my private portfolio, I had about the same 200 to 300 shares. But my average cost was in around like the $7 to $8 range because I was buying in 6 to 9. And, I wish I wouldn't have sold out my position, but I ended up selling, I think in like the teens, like maybe like 18, 19 on that position. And then I went heavy into SoFi. So if you notice here, like over the last year, Palantir, 45%, 360% in a year. And then the last 5 years, 1,000%. So like I said, I sold my original position in both this portfolio and my private portfolio, and I went into SoFi. So let's go look at that real quick. So SoFi, year to date, about down 1%, 1 year, 93%, 5 years, 35%. So clearly not as good as Palantir, but I still made money. So I'm not beating myself up too much. You can't always be right. But the main thing is, if you notice, I still got back into Palantir. I was buying, all through like the mid 20s. And then, because I was running the wheel on this as well, I lost my shares at 30. And then I rebought 100 shares at 30, and then I've been buying consistently all the way up. So, let's go back to my history here. You're see, I'm buying almost regularly, right? So this is January, December, November, so on. I've been buying for a long time. I have my reoccurring buy, but then I'm buying like chunks at a time. This one at $54, which 54 was crazy when it was trading at 20, but now that it's 110, it's basically effectively doubled. So I think they are pretty high in value right now. But I am still continuously buying at $3 a share. I think AI software is going to be like booming. Obviously, NVIDIA is what everyone's talking about. That's hardware. And, hardware eventually has a cap. You're seeing what's happening to Apple where, innovation starts to kind of die, or maybe you're not having drastic changes year over year, and then your portfolio or like your sales aren't going to be keeping up. But software, I think, is very scalable. You can always increase prices, things like that. So I think that software is going to be where AI is going to thrive. If you notice here too, let's go to Netflix. So Netflix is another kind of play if you think about it from like a kind of software perspective. And they have very much high PP, aka pricing power. And so even with Netflix, they're doing great over the last several years. But the thing about Netflix is when that dip happened, this would have been the perfect time to buy. I think every year, they're going to raise your subscription a couple bucks and no one really bats an eye. So that's a way to consistently make money, whether or not you're necessarily innovating. And, Netflix is obviously releasing content. They have Squid Games and all these things coming out. But ultimately, they're not reliant on a cycle of creating a whole new device like Apple is with, their iPhone. Anyways, guys, I appreciate you sticking around for this long. As you've seen, the portfolio has been doing amazing, $54,912. Either which way, guys, I'm going to continue to build this position. I'm going to set the goal now. Let's get to $70,000 before the end of the year. I'm going to try and, minimally inject capital into portfolio, but as long as Robinhood is paying this 4%, I might park some more cash over here, so I might organically get to that 70 a little bit faster. But guys, either which way, like I said, smash the like button, subscribe if you haven't already, and I will see you on the next